All right, hey everyone. I hope that the audio is improving. I know there's been some issues with my recordings, and I'm afraid I've got a bad internal mic on a new laptop I got a few months back, and I'm still working to get that fixed, or at least figure out what's wrong. Obviously, I don't want to get a new laptop since I just got one. Anyways, I'm going to review just a few higher time frame Forex markets and just kind of give my thoughts really quick. So let's start with here's the euro dollar, and I'll fix some of this. There we go. So first monthly chart, as you can see, we broke below the, I'll call it the all-time low. It's probably not, but it's the low of the past, 10 years. We broke below it, reversed up strongly, pretty strong breakout. So obviously the bulls are hoping for some sort of measured move up, and I think we will get that. If I look at this chart, what strikes me is trending. So we had a trading range all through here, then a bear breakout, and then sideways. So it's a trending trading range environment, and usually some people will call it a broad channel, which you could call it that. So I think the bulls who bought this low or this low or this low, I don't know as much about this low, but I think any bull who bought this low or this low during this breakout will make money. So that means, how would they structure that trade? Well, theoretically they buy this low and they wait for a bull bar. Maybe they buy more above this bull bar, and as you can see, break even was right here. So the average, what that means is a trader would buy here, buy more above a bull bar, and exit the entire trade break even. Now, that would be, you would lose commission theoretically, but you would have a break-even trade. This loss, open loss from here to here, would be canceled out by this profit from here to here. Other traders may buy here above this bar. And the reality is, traders who are buying down here will probably be able to make money. So that if they bought this low, bought above this bar, bought above this bar, if they're patient, they will probably be able to exit at their first entry. So they'll break even on their first and a profit on their second. So, why is that important? Since this is a monthly chart, I don't think it's really logical for an institution or an individual trader to simply buy the breakout on January of 2015 and hold, and then buy more above here and hold. Now, maybe if you're an institution, you have a lot of volume, you could trade a lot of volume, maybe, but my only issue with that is, no, I could see a trader buying here, buying more, and exiting the trade here because that's a few months later. But again, that's still, it's almost 9 months. So you have an opportunity cost at that point. And what I mean is your money is tied up in a trade that's going to take a really, really long time for marginal return. So I think most traders would take the loss and move on with the next trade. Now, just because it's a monthly chart. So anyways, I think this is a logical buy. And in theory, traders know that traders will buy here trying to get out break even at their first in theory. So why not buy, use a wide stop, and set a target somewhere up here? You'll probably make money. So needless to say, I think we're going to go above these highs, and I think we're going to get below this low. And at some point, I think we will get back in the middle of this range. The market saw this area as value. Therefore, I think, and the market stayed in this area for ever since 2008 or late 2015 or late 2014. So I think we're going to test back into this again. Monthly chart, that could take several years. Daily chart has something pretty interesting going on. Well, let me look at the week. Let me show it on the weekly chart. It'd be easier. So again, trading range ever since 2015. But look over here. We've had 1, 2, 3, 4, 5. This is the 6th week to not touch the moving average. Now this is a 20-period exponential moving average, which means it's just I'm not going to explain what an exponential moving average is, but it's the average of the past 20 prices, and I really don't fully understand. I know that an exponential moving average is more sensitive to recent price. And if you want to learn more about an exponential moving average, just Google it. But with that said, this is the market. You can use whatever moving average you want. You can use a 20 moving average. You can use a 30-period moving average. But right now, price is very far away from the moving average, which means the moving average is a fair price. So the market sees the moving average generally as a fair price because it's the average of X amount of bars back. We're very far away from it. So the market's very expensive, and it's forcing traders to buy far away from what most traders deem as average. Now look at the past 2 years. If we look back, when is the last time? So right now we have 6 bars without touching. Here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 bars. Strong trend down here. If you just look, when is the last time in the past, ever since 2015, that we spent 6 bars, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars, 9 or 10 right here, but it's not that common. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So even here, 1, 2, 3, 4, 5, 6 bars. So around 6 bars, we started to turn up. 1, 2, 3, 4, 5, 6 bars we turned up. So, needless to say, I think we're going to have to test down. Daily chart, even more climactic. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 bars away from the moving average. So, I think we're going to have to test back to it. We're also at resistance. This move is climactic. Possible measure to move up. So I think, I'm not saying we're going to reverse, but we came very close to touching the moving average here. I think we're going to have to pull back and at least touch it, as we did over here. USD daily chart in a broad channel for many bars. Doesn't matter how you want to draw the channel. Needless to say, just draw this real quick. Draw like that if you want. Strong bull breakout. We're channeling down. The odds favor an upside breakout. So, this is pretty strong. And my initial thought is, will we get below this low? At some point, traders will stop buying new lows and they'll buy higher lows. So we'll see. I think the reality is traders will buy, scale in, and they'll probably buy below this low. But I would not be in a rush to buy. Euro Japanese yen. Strong breakout, broke above these highs, but we're starting to fail. And you have to protect, the bulls probably have a stop here, maybe here. My initial thought is this is the trading range. So personally, I'm thinking more in terms of a downside breakout and price at least testing below this low. When you look at this chart, ask yourself, is this a trading range or a trend? I can see the argument of a trend. Bull breakout. Here's a higher low, here's a higher high, but this is weak. So look at this high, 807. This high did not go above this. So this makes me think it's a minor reversal or a minor higher low, and we'll probably fall below it. So I think we're in a trading range. Trading ranges usually fall below minor higher lows. So with that said, I think this is the wrong place to have a stop because I think we're in a trading range and I think we're high up in the range. Therefore, I think selling up here, just ask yourself, what's more logical? If I buy here, put a stop down here, is there a 60% chance price gets up to here? I'm not so sure. I think there's sellers up here, so I would rather. I just don't think it's a good trade. I think someone, maybe they sell here, put a stop way up here. Again, I think we're just going to go sideways. Great British Pound. This is pretty interesting. So, similar to the monthly chart of the euro dollar, sideways for many months, upside breakout, but bad follow through. So it's basically a spike in channel, 3 pushes up, 1, 2, 3. I'll go ahead and draw it. Doesn't quite matter how you want to draw it, but it's 3 pushes. You can say 1, 2, 3, 4 pushes, but I would really just call this one. This is just the same 2 pushes up, so 1 push, 2nd push, either one of these highs, and then a 3rd push. Tested the bottom of the trading range, broke below it, so now we're going sideways. Been sideways for 20 bars. I think that we're going to get a downside breakout. So maybe something like that. And I think we're going to go back into this range. My issue is, so we have a double bottom. Bulls want a measured move up. However, measured move, here's the neckline, measured move up. Look at this bear breakout. So right now, 50% pullback, and I think 2 things. I think the bears will make money selling this high. They already made money selling this high. They sell this high. Maybe they sell more below a bear bar up here, or maybe below here. They would not sell here. Probably not here, too many bars up. Maybe here, maybe in here. And the reality is I think they'll make money. So I think we're going to close this gap. I think it'll be exhaustion. Bulls want some sort of measured move up. Maybe up here, but I don't think they'll get it. USD Canadian. And this was the Great British Pound. Euro Japanese yen. USD yen. Here's the USD Canadian chart. And it's just really, really messy. If I go to a monthly chart, you can see 2 important things happened. So bears who sold this high and higher made money. So what do I think is going to happen up here if we get up there? I think that bears are going to make money selling up here. Now, two things with that. The bears clearly made money selling above this high. So it may be so obvious that they clearly made money. You know, this was such a poor revert. I mean, bulls had consecutive buy climaxes. Buy climax, buy climax, buy climax. The longer a move goes up or down, the harder it is for the with trend traders to maintain the move. Why is that? Well, at the very strongest point of a breakout or a trend, the opposite traders, counter trend traders cannot make money. So right here, bulls are buying, buying. If you sell at any point here, you're not going to make money because, you know, just look at it. Let's say I sell this close, and then I sell here, and then I sell here. Unless I double my position or quadruple my position, I'm not going to make money. And it's just not logical to do that. You know, here it's different. You buy this close, made money. You buy here, scaling lower, made money. So, anyways, very tight channel, broke strongly above this high, sharply reversed down. So if we look at, if we saw the yearly chart, this would be a strong 2-bar reversal, as would this. So it may be so obvious that there's sellers above that you may have a lot of bears not confident that price will even get above this high, so they'll start selling halfway up, or a 50% pullback, which is the same place. You can see traders are doing that. So, you know, right here, the market's always in short, always in short. Stop up here. Strong reversal, but probably sellers above. You know, it's a trend line break, so you're probably going to have some sort of a retest. And you think, oh, the market's reversing, it's going to go higher. Bad follow through. So look at every trend bar. Trend bar, bad follow through. Trend bar, bad follow through. Bear trend bar, bad follow through. Bull bar, bad follow through. So it's kind of 3 pushes up. Doesn't matter where you sell it here, it stops up here. So if I had to do anything, I'd be short. Stop up here, betting that we get this. And I think we will get this. You know, I think that with the way this chart looks, we're going to test back down. We may even get, as you just saw me draw leg 1, leg 2, we may get a measured move down. No one knows. But I think we'll get a second leg down, and I think that the bears who sold this close will make money. Daily chart, really just, it's ugly. You know, not great price action for people starting out. This is it's a channel. However, it's very broad, so it's more so a trading range. A trading range and a channel are the same thing. A channel is just a sloped trading range. And what that means is two sides are making money. So when I look at this, this is what I see. And I see a way for the bulls and the bears to make money. So price gets up here, sells off. So we're getting deep pullbacks. Gets up above new highs, sells off. Gets down here. What do I think is going to happen? Well, look down here. I think that traders buying here, buying lower will make money. You know, if you just look at this chart and think about logical things to do. You know, maybe strong breakout follow through. Okay, I'll buy for a scalp. What's a scalp? Maybe, I don't even know what a scalp would be on a daily chart. 50 pips. That may be too much. Well, no, it's not too much. So maybe you scalp for 100 pips, or you say breakout follow through. I'll go for a measure move up. I need to get a new mouse. Keeps clicking it twice. Measure move up. So other traders will say, high up in the range, I'll just sell. Scale them higher, and they'll make money. I need to speed this up. Aussie dollar, more of the same. It's a trading range. Bulls are making money, bears are making money. And traders who use wide stops and scale in will be rewarded. You know, this always interests me down here. So you get a strong breakout, odds are you'll get a second leg. However, pretty disappointing, you know, decent buy setups in here, but not great unless you're using a wide stop. So if you may think, oh, low one, failed low two. Here's a failed low two, you know, it's a second entry buy. The bears failed twice, I'll buy above this bar. Well, the reality is you may get a measured move down. If you're buying, you probably need a measured move down way down here. Traders who are taking this buy are, I think, really doing one of two things. They're either buying and exiting up here, they're buying or scalping, buying or exiting up here, or they're buying and using an extremely wide stop and scaling in. Strong bear breakout, but look to the left. It's a trading range, probably buyers down here. So if we get down here, again, probably buyers down here, trading range. USD, Swiss franc, strong breakout, selling off sharply, but best looking bear bar in the past many bars. So probably exhaustion, and I think we'll bounce soon. We're within support levels. Maybe we have to get down here, but personally I'd be looking to buy down here. All right, that's all the time I have. Thanks for watching.